There we go. We got some people on now. Good morning to you all. Good afternoon, good evening, wherever you are. Hope you all doing well.
Good morning. Top of the morning. Bright and early.
Let's wait for people to trickle on in.
A little jazz going this morning. Have another chill session last week. Enjoyed that.
Let me know where you guys are from. Put it in the chat. I love to hear that. And also what pairs you're looking at potentially trading today. All the way from India. Awesome.
From India, huh? Sat Sri Akal. Audio has an echo.
Are you guys the same? Is the audio echoing for you? Germany, Jersey, nice.
Germany.
It's better now. Okay, Carter, cool.
Hello, wie geht es dir?
Nigeria, what else we got in here? Trinidad, Dominican Republic, Austin, Texas, let's go.
TNT. That's awesome.
South Africa. Load shedding is insane right now. We'll get started in about a minute. About 30 seconds. I'm going to wait until 8:05. You have a good amount of people in here so far. Botswana. Good morning to you all. Love to see the enthusiasm this morning. Let's go. And CAD Chef, EU, UJ. Guys are looking at that. We'll talk about a few of those. Philippines. Washington State. Jeez, it's early for you. 5 a.m. Dedication. All right, guys, we'll go ahead and get started. Oh, Ireland, nice. Good morning. We'll go ahead and get started now. We have quite a few setups. I'm going to be going over most of the exotics and majors. Aiden will be going over some pound pairs. Let's finish it off with some questions. So I'm going to get started real quick. I'm going to get into Canva mode. I'm going to share my screen.
Wait, hold on. Will said something. Pause the feed from the chat room and click on the YouTube link to solve echo. It's weird. I don't hear echo when you speak, but maybe it's because we're both in the studio. I don't know.
Yeah, it should go away in a minute. All right, so I'm going to share my screen. I'm going to remove Aiden, and then we'll get right into it. I got to add myself back. There we go. Okay, can you guys see my screen here? Can you guys hear me? All right, guys, we'll get started here. I have quite a few that I want to go over. I'm going to start off with AUD USD, actually. So AUD USD is quite interesting. If I go to the higher time frames, obviously we know that we're currently bearish. So there really shouldn't be any excuse for anyone trying to take longs. I haven't seen a long setup in quite some time on AU. Obviously, the trend will be your friend here. You want to continue to do that. Now, what's interesting is that before we get into these higher time frame levels, I would not be surprised if we have some sort of huge impulsive move to the upside. Obviously, that's not what I want to be seeing. I want to look for continuations short into our overall level. However, before we come into these higher time frame levels, they oftentimes will take price in the overall direction, right? An overall long direction, especially if we're in a downtrend. They want to sweep out everyone who's been short, right? Take out all the liquidity and then continue its way down into that objective before potentially reversing. So normally before we come into these objective regions, we will sweep liquidity, have some sort of buy to sell formation and continue lower. So if that's the case, if we do come higher, we have to be still looking for shorts, in my opinion, because we have not come down into objective. Now, this objective will sit around 6.7 or 6.680, and we've been discussing this for quite some time now. We can see the sensitivity revolving around this level. We have many touches of support here, turn resistance again, and then we just busted through that and we continue to expand to the upside. So we have a lot of imbalance here. We have that daily time frame demand level. So 6.680 is really where I want to be getting into on this pair. So continuation short would be expected, and obviously we know the dollar is not done with its bullish run. We're just in a little bit of a pullback phase here on the dollar. So the dollar is just quite weak at the moment. However, I am liking a couple areas for potential shorts. I like 6.8 and then 6.816. So we can just see the continuations, lower low, lower high, lower low. We called this out last week. We had a reaction. We came back up and swept that high. We opened, and if you guys were on my live session on, I think it was Sunday. Yeah, this past Sunday, I said that I wanted to see the market open and immediately fall. Why? Because we already came into our area of interest. There was nothing left for price to come up and mitigate or fill or whatever you want to call it. So the only thing that it could do is open and fall. That's exactly what I said verbatim on the call on Sunday. And that's exactly what happened. We rolled over. So that lower low was formed. So naturally we should expect a lower high for continuations short into our overall level. We can see that we haven't come into that. So continuation short should still be in order. Now we have multiple levels of supply that we could pop up into. We have this hourly time frame supply. We have this hourly time frame supply. I wouldn't be surprised if we come a little bit higher, but ultimately a rollover is expected. And we can see this level of sensitivity. We have the high here, resistance, support, resistance, resistance, just choppiness around this level, support, support, support. 0.6800. This is a perfect psych level for this pair. Highly sensitive region of price. And we can see that lines up with not only the imbalance, but with that hourly time frame supply. So that's exactly what I'll be looking at getting up into, and we can look to be taking shorts from that level. I'd probably say stop loss would have to go. If you want to be risky, I would probably put it above this high here. But if you want to be more conservative, maybe above this high or this high here. But overall continuation short are expected. Getting into my next pair, Chef JPY. So we've been looking at shorts for quite some time. We've just been in the consolidated period for the past week or so. So we can see that we are higher time frame bullish. All right. We're making higher highs, higher lows. Overall, we're bullish. So we should be looking for overall continuations long, right? Well, we haven't come down into objective yet. This is going to be the price point in which I would even consider starting to look for long. So 137.795. That market structure may be digging deeper into discount, into demand and imbalance. Obviously, we haven't hit that yet. So, potential shorts down into this level could be in order. But again, if you're trading counter trend, you still need all of your rules and confluences met. There was a question I had yesterday. Someone asked me, well, why can't you just short down into your overall objective? Well, you can, but you have to still build confluence first. Treat every single trade like it's a normal trade, whether it's counter trend or in the correct direction of trend. You should have all your rules being met. Just because you have conviction that we should come down into here doesn't mean it will. So you shouldn't just sell it because you think it should come down into here. Well, what if it just blitzes and goes long? Well, you had no confluence to take it short, right? So you have to treat every trade like it's its own. However, we do have confluence for shorts. We have equal highs, the draw and liquidity that we just come up and took now. We also have this area of supply. And we can see that with this counter trend pullback, this was our area of demand. We had a reaction from that level. We failed to make that higher high, and we made the lower low. So now this becomes supply. We could push up a little bit higher into 141.4, 141.392 to fill that imbalance, to maintain the structure, lower low, lower high, lower low. Looking for a pullback, lower high, into that lower low. We can see that we want one drive, two drive, looking for that third. Now, originally we were looking for longs, right? This is a sponsored candle. This swept liquidity and we made the higher high, right? We pulled back down into it and we reacted from that level. However, we never maintained our momentum and we never continued to make that higher high. We reacted off of supply and made that lower low. So that confirmed that we are now in this pullback phase. So now we can potentially be looking for shorts into the objective, right? So we have built much confluence surrounding these two levels. We have the draw on liquidity. So I really want price to really push back up into it, create that buy to sell, enter into one of these two levels or even both if we push up higher, and then look for potential secondary entries. So if we come up, let's just say we come up into there and, we're forming counter trend. We have the reaction. That could be another potential entry for Chef J. So it all just depends on what we do. And we're just reacting to what we see. Obviously, we have our predetermined level, but that doesn't mean that we necessarily will react from that level. We could easily do something like this, just stop right now, chop around, buy to sell, not come into that level, and that could be something we take off of. So it's always just about adaptation. We'll just do what the market gives us and continue on from there. So, but nonetheless, these two levels are of interest to me. I already have limit orders here. So if you guys want to do that, I expect that price will come up into this level today during the New York session. NZD USD. So NU is a little interesting. Obviously, we're seeing that dollar weakness right now. We're seeing a deeper pullback, and that's expected. I had a couple of levels here of supply after we've made that lower low, because what we did was we built liquidity. We kind of consolidated in here, had the draw on liquidity here and here. So when we were trading in here, I'm like, well, okay, well, I'd like to see some sort of manipulation long before continuation short. And that's exactly where we came into our overall level of supply that was once demand, because we'd see higher high, higher low, higher high, higher low reaction, failed to make that higher high and lower low as expected because we are bearish. So now this demand flips to supply and we took it off of 6206 last Friday. We had an additional level here. I believe that may have been like a 30-minute up close. It looks better on the lower time frame, I think. But for the sake of time, I won't get into it. 6227.50 was that secondary level. We never hit that. That's okay. You can have multiple levels of interest. We just delete the second order. We made that lower low, so now we want to expect a lower high, right? So we have these two levels. I had this original level. This was not in premium price. Normally, I like to be selling at premiums. If I pull my fib from the high to the low, we can see that this is not in premium yet. But, with the current market condition, we could easily just see smaller retracements for continuations. We did get a reaction, but now we're coming back up higher. So now we're coming up into our secondary level of supply. So we could have that reaction and go short. Now I am looking for continuation short, but we also could come a little bit higher, maybe for the 30-minute. Yeah, maybe a tad bit higher, maybe into this supply. But if we come anywhere above this level, we're probably just going to go long and have that overall pullback before continuation short. I don't think we're done with the bullish run on the dollar. I do think we're going to come shorter. And we can see that because this is not a low in the market. These are equal lows. This is not accumulation. We really ought to come lower and take that liquidity. Usually, if the market's going to shift structure, you would want to see some sort of massive liquidity run and immediate reaction. That or some sort of accumulation in some sort of discount, right? So obviously below these lows, and then that expansion and continuation for the accumulation. That's what we would like to see if we actually are to go long semi-long-term or long-term. Okay. But obviously we haven't had that yet. We should still be looking for shorts. But like I said before, we have been perfectly making these lower lows, lower highs, reacting off of every single solitary supply level. I wouldn't be surprised if we had some sort of run, enticing the buyers, maybe sweeping all this liquidity, but then coming short again. So I will still be looking for shorts no matter what price does. We can see that we are starting to react off of that supply level now. Hopefully, you know what we can do. We can see some sort of lower time frame confirmation. So what we would like to see is obviously a reaction from our level, maybe come up again, maybe start to distribute, you know, break that counter trend structure, or just form some sort of liquidity, take it, push down, something like that. That's what we would like to see. But it's also not a bad idea just to be placing smaller positions at these levels, right? Because if price could just trickle up in it and then trickle down and you never get the confirmation, but then, you know, you're still in the trade because you set your orders there. But that doesn't mean that we should be setting full-fledged risk, right? You want to be testing the waters here, maybe placing smaller positions like 1/4% or 0.5% at each level and waiting to see if you get confirmation. If you do, then you can place the rest of your risk on. If you don't and you lose, then you're only losing a little bit, right? Because there was no confirmation. But if, you know, if price doesn't confirm and just continue short, well, at least you're in the trade, right? Because you had that confluence to begin with. You had that bias. You have those levels. So that's why it's okay if all the confluences are there and your rules are met, just to place smaller positions and wait for confirmation. All right, next, UJ. So UJ, we have our higher time frame level, and I'm not going to go into this a lot, but well, if I just scroll over, I think it's on the weekly. Yeah, it's the weekly time frame imbalance. So we are continuing long here. We did take out this high. This is our last buy to sell. We have the imbalance in here. We could easily come up and take this high from 1998. That could easily happen. The dollar is very strong. I wouldn't be surprised if that occurred. But at least if we are to go short, we ought to be coming up into this imbalance. Maybe anywhere between 138 and 140 would be nice, because we can see that we are pushing up into that now. That will be the higher time frame objective. And it doesn't mean that you should just be shorting when price gets in here. There's no confluence and the rules are not met, especially for me, to just be selling this right when we get into this blue box here. This just means that this is where price ought to go. We can be looking for counter trend buys up into this level and maybe looking for potential shorts if we get confirmation, right? But this doesn't mean to just sell here. So many people ask me that question, and it's like, well, you got to build your confluence first. Treat every trade like it's its own. We're very strong right now. There should be no reason we should be just placing sell limits. So for the counter trend, we haven't hit that objective yet. So any potential buy setup would be valid up until at least probably 138.5, 139, or 140. So going down to the 1 hour time frame, we've had multiple entries, and I've sent most of this out to VIP last week. We had an entry here, we had an entry down here, and then I personally had one here. We had that accumulation. We were in big profit. We broke the counter trend. So accumulation into demand, broke the counter trend, formed that retail head and shoulders pattern, equal lows, shoulder, head, shoulder, came back down, ran that. Retail sold below the neckline. And that's good that they did, because then there's just more liquidity to take to the upside, because they place their stops here, because they're, I'm not going to call them a bad name. They're just stupid. Anyways, we pushed down into our prior market structure. We actually had that 5-minute demand zone that was met perfectly. So that could have been another entry in and of itself. I took that entry, but I'm a more conservative trader. I didn't place my stop right below that demand just in case we did fill and balance a little more coming down further. I placed my stop below the low, but nonetheless, it was still a great trade. We came into that level and we made a huge move to the upside, right? Breaking that counter trend again. So we faked out the retail head and shoulders traders right back to the upside, took their stop loss, and continued with the overall trend as expected. Now, for the here and now, where could we pull back up or pull down into? Well, we broke the counter trend here. We made the move, had a little bit of a retracement, continued. If we come down, I would like to take this low, acting as liquidity, getting deeper into discount. right? Because I would say that, well, really the range, this is the low that produced this higher high. So really this is the range, but everything else in here has been filled. So I would probably consider a lower time frame range to probably be right here between this low and this high. So if we pull our fib, we want to get down into discount. So really anywhere between 61.8, 78.6, golden pocket, we can see a little bit of a demand here, but just looking for longs when we get deeper down into discount, retesting these lows. All right. Or well, retesting these areas of demand. So I'm liking 136.2. That would be a nice level for me. If we come a little bit lower, maybe sweep the low that was created at the start of the week, could be a potential because this was where we opened. Come down deeper into this level, could be looking for accumulation or some sort of setup to buy it. That would be very nice. And we can see that we are forming descending trendline liquidity. So if we continue short, that will be the draw on liquidity to take as retail is selling at this trend line. Obviously, if we come up into our overall objective, the buys are off the table, and I'll just be sitting on my hands for now. But until then, I am looking for longs. I just want to dig deeper into discount before doing so. Last one for me, and I'll hand it over to Aiden. We have AUD NZD. So we've been talking about this pair for quite some time now. Now, if you are in VIP, you would know that we did have a buy from our original level in here from 1.1. We dug a little deeper into it, and that was just because we were hitting some lower time frame areas, and that's okay. We maintained our structure, and we pushed to the upside. If we go to the lower time frame, what we will see is upon the reaction from the demand, there's so much confluence going on in here. We made an expansionary move, we pulled back, we accumulated. There was a smaller time frame area of demand here that formed. We made that higher high, so I expected, okay, well, we could come down into this region of demand. I'll just show you 15-minute right in here before the expansion imbalance move. That could be a region of price we look to take a long from, right? Because we did accumulate. We missed these two levels, but we did accumulate in price, and then we made that higher high. So could we come into that level and react from it? Well, we had a reaction, but it wasn't sustained. We never broke the counter trend to the upside. I did take a small position, and I did lose this position. Place my stops below the low here because this was the low that swept liquidity here coming into demand that created the expansion. So that could be that would have been a proper stop loss. Obviously, we did come down, take my stop, but that's okay. And I didn't place a big, a large, my normal risk on it, which is 1%. Because I wanted to wait for confirmation. And two, we had these levels here that we still haven't come down into. And I said to on the live session that we could easily, bust through this level and then come down into our overall levels of demand here. Sweeping this liquidity, right? The low here. That's a possibility. So we actually did that. And I had two levels, this intermediate level of demand and then our lower level of demand. I really wanted price to push down into it. We still could. We still have that possibility. Obviously, if we make a higher high, if we close above this high here, I probably wouldn't expect price to come lower into this level, but we're still within this range here. This is the low that produced this higher high, right? That's why this is the range. So could we have a deeper pullback into here? Sure. I would definitely be looking for longs. However, for the here and now, we are counter trend bullish. We reacted off of my initial level. We go down to a lower time frame. I'll just check out. Yeah, 15 minutes, good. We did accumulate. And I said that since we accumulated in price, this low swept this low, we sprung, breaking the counter trend. Okay. We reacted from each and every level of demand that we were producing. And I said, okay, well, once price pushes up, we made that higher high. We closed above the real counter trend, even though this was the counter trend because lower low, lower high, lower low, lower high, lower low, sweeping that low. This becomes the trend or the swing point in which we need to break before considering ourselves bullish. But then we really got back above the overall level here, breaking that counter trend. So I wanted longs, accumulation into that level of interest. This was the candle that was produced. This sell to buy candle came into this demand, that came into this demand, that came into this demand. That probably came into this demand here. So we can see the continuations of structure. We have imbalance. So I said, okay, well, we broke the counter trend. I want price to pull back into this level. It's exactly what we got. and we continued long from there. We had that NZD news, I think it was a rate statement or something like that last night. We pushed up, created ascending liquidity, pushed down, sell to buy, and then we expanded, making another higher high from there. So what I would like to see is just price pushing down further into discount, into this level in which we swept liquidity, reacting from this demand that, you know, subsequently reacted here, 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 and here, so on and so forth. Imbalanced move. This is such an imbalanced move. We have liquidity resting below this low, so that will act as the draw. So pushing down into that, sweep liquidity, fill imbalance, come into this sponsored move, and then continue up along with the overall trend. Okay, that would be a beautiful spot to take buys from. 1.10255. I have my buy limit set there if you want to do the same. So obviously we know that we have another level of demand lower, and that's okay. If we end up breaking to the downside, I will definitely be looking for buys. Stops below, obviously the low here. For me, stops would go below here for the long from 1.10255. All right, so that is all I have. Be sure you're marking off these levels. If you missed anything, just post it in the chat. I'll be happy to go over it briefly after the end of this whole session. And obviously you'll have the recording at the end as well. All righty. Oh, looking, it's okay. Guess Aiden's not feeling too well right now. I guess I can just take over for him and continue here. You guys have any questions so far? Let me exit out of this. Stop sharing. I'm going to add Aiden back. He said he's going to try to go over some pairs if he can.
All right, let's see. Can you hear me, Nate?
Yeah.
Yeah, sorry, guys, not feeling too well this morning. All right. Can you put it on, what's that mode? Canvas?
Yeah, you got it.
All right, cool. One sec. All right, so a few setups for you guys this morning. Go ahead and take these parameters down. Hopefully we don't run these lows right now. But this is Euro AUD, guys. 1.48382. Whoa, don't take it. I guess there's news. Look at that. Wow. All right, so there's that. That was wild. All right, guys, so that's what happens with news. Moving on to a new setup. All right. Euro GBP, I think this morning, guys, we had our London session sell to buy. All right, so if you look at price action London open, right, you can see we run higher, we ultimately run lower, then we break structure. All right, so I think New York will provide discount for us to essentially buy into these equal highs. All right, and so we have relative equal highs here. I think we can trade at least up into 8,500. I know this thing has been obviously trading lower for quite some time, but I think that this will provide us that potential retracement coming into the end of the week. All right, so let's look at the lower time frame. If you pull a fib, all right, we just want to get discount. Obviously 50% is equilibrium, but I think if we can trade a little bit lower intraday, we can go ahead and look to buy this thing up. That 8,500 again is above these relative equal highs, right? And also that 1 hour up close candle. All right, so this is something where Personally, I wouldn't. And I'm frozen. Nate, can you hear me still?
Yeah, I can hear you. Is it good?
Like I said, I would be looking at the 871 zone, right? Obviously, stop loss would go below London's. Because ought to provide the, okay, if we're going, if the session low ought to be that low. All right, and so I do have one position already on this personally. It was off of this little 20-minute candle. We hit it, had the reaction. Looks like we've run through it one more time. But typically we like to get a little further discount. So I only have a small position here, and we do see a lot of manipulation around this time. So if we can trade a little bit lower, spike down again, I would look to potentially buy Euro GBP today. This was another setup that I was looking at, GBP NZD, and this one is spiking pretty hard at the moment. But just to kind of break this down, what I'm looking at, if we get a reaction on the lower time frame, is simply following this mitigation train, right? You can see how supply is being met with supply, right? Trading into it, mitigation, break a structure, same here, all right? And so I was looking this morning at this 45-minute candle as POI. We're currently running through it, so I'm not going to be taking this one just yet. Wait for the lower time frame reaction. So if we get this as kind of a buy to sell, then I would be looking to kind of take this, we break structure, right? Look to take it off of this, the opening of this up close right here, all right? We're currently trading into this cluster of candlesticks that makes up that higher time frame sponsor candle. All right, so let's see if we get that reaction from this POI, break lower, pull back. The opening should suffice 1.9370 for a potential intraday shorting opportunity on GBP NZD. All right, and in terms of targets where I'm looking to go with this one, I'd really like to see this thing run these intermediate lows here, right? So relative equal lows, but ultimately I think this is that kind of demand that we need to trade into to mitigate, right? So that brings us into 9280, and we could very easily create another low, right? We could create a lower low here, and even target this low. All right, but we'll see how price reacts. Okay, we're trading in that POI at the moment, and there's a similar POI on GBP AUD as well. It's probably we've already spiked through it. All right, so same deal. We're looking for that reaction now. Okay, obviously it's leaving a big wick at the moment, but if we do break lower now, I think this area should suffice as well for a pullback and a continuation. All right, so be on the lookout for that as well. And I think that is all. Nate, is there any live setup that you're looking at that I missed? I don't think so.
I believe that's it for now. GCHF, GA, GN, EG, we covered them. Good, guys. Do you have anything that you'd like us to see? Do you have any pairs that you're currently looking at that maybe we could help break down for you?
GCHF, I mean, same kind of deal. Pound pairs. And this one, looking at this potential up close for a continuation. Right, you can see London session. We have equal highs here. Engineering 2 a.m. in the morning. Right, we talk about this all the time. Time and price, so critical. 2 a.m. you often see that manipulation. All right, so looking for that pullback into this level, 1.1680 really is where it comes in at. All right, and then look to trade this thing lower. I mean, we have a very clean pool of liquidity to the downside. Right, obviously this thing has been trading lower as well. Structure is to the downside. So ultimately, we should be looking at lower prices. Now, the only thing that I've been looking at are these relative equal highs and the fact that we did trade above this high here. So I thought maybe we could get a push higher into these equal highs. But I think in a downtrend, this is going to probably be more attractive to them. All right, so targeting these old lows here, right? Especially if we break structure now, break this low, look for that pullback into that level 1.1680 and a simple continuation down into these lows. All right, but that's GBP CHF. And I think you pretty much covered everything else that I was looking at, Nate. So I guess we can pause and take some
we take some questions. I can go over a few pairs. We here at Ariel Fx, we really pride ourselves in our ability to do proper market structure. Market structure, in our opinion, is very important because many people will take trades that have a lot of confluence, then their rules are being met, right? But do you find yourself, and this is a rhetorical question that you can answer in your head, but do you find yourself placing positions that you feel so strongly about, but then you get your stop loss run? That probably stems down to two things: not the right time of day, and also not the right direction of trend. And now you might be saying, well, I'm trading in the higher time frame direction of trend. Well, that's good, but there could be areas where price pushes into for its objective for the day or for the week. There could be areas of supply and demand that are the quote unquote higher time frame objective in the opposite direction of trend that pushes and hits your stop loss because it hasn't hit that objective yet. So we do a really good job here at pinpointing these lower and higher time frame objectives so we know that we're getting the highest probable setup. So I hope you guys are taking value from this, are seeing this yourself, can start to apply this yourself. Ultimately, that's why you're here, is you want to learn and you want to be able to do this on your own. If you need a little bit of like a kick or a little bit of a boost in your trading, if you're almost there, or even if you don't have much experience, if you are wanting to really take that trading, you're trading to a whole new level and want to become a full-time funded trader, that's what our ultimate goal is now. We were originally a signal service company. We don't do that anymore. We don't do handouts. We don't believe in that. Now we're all about working with our clients to help them reach their overall goals, to get them to that funded level in which we are. So if that's the case, guys, I think we only have 5 or 6 more spots left. We had 10 spots left for our summer program last Sunday, so a few days ago, but it's going quick. So if you guys are interested, head over to our website, www.arielfxtrading.com. Book a free call. We'd love to work with you and talk to you about how we can best help you, set you up with an actionable plan that you can start putting into practice today. To see if you're the right fit for our program, because we have specific criteria of who we work with. So yeah, I can go over a few pairs now. EU, CAD Chef, I see US30. All right, I'll go over a few. There we go. Aiden, can you see this all right?
Yeah, I got you.
I can just kind of go over what's been going on because we just had news and it's kind of been creating a lot of volatility lately. So this created equal lows. What is this going to be, guys? This is going to be the draw in liquidity. We should all really come lower into our imbalance and then continue. Let's see, the low here was 295. The low there was 295. So it's perfectly equal lows. Okay. So that's what we'd like to see. Run on those lows, build up of liquidity prior to a level, say it all the time, come into that 10255 level and then continue long. Obviously, if it just continues along, oh well, we just move on. We don't want to force anything. FOMO is definitely real in this industry. People have the conviction that we're going long and it just misses their entry and then price starts to push to the upside. Then they just buy right there. Not smart, guys, not smart, because your risk to reward just goes down significantly. It's not worth it. We already have multiple positions here anyway, so I'm good.
Let's see. And that's really what you want to see, guys. And we've talked about this in the past, but we really want to see equal lows or equal highs right prior to sponsor candles, right? And so that's a huge confluence for us, right? Because while simultaneously mitigating sponsor candles, they not only just account for prior sponsor candles, but they kill two birds with one stone, essentially. So they're taking liquidity while mitigating, right? So it's like, if we're going to go up to this candlestick,
I think you may have cut out. All right. Anyways, guys, so 50% of this imbalance, 1.00993, we pushed up into that perfectly before the news. All right, so I'm just going to get rid of this. 1 hour time frame. What did we build up? Liquidity here. Okay. So much liquidity. We took it and then we rallied. So what could we expect here on EU? Obviously, continuation short. The dollar is overall bullish. So if we can, I know this is asking a lot, but if we can get back up into that level, start to trickle back up, then that let's call it 1.0060 would be a nice level. But again, it all just depends on what happens. If we could just continue to free fall, then the chances of getting all the way back up here and falling again are probably low. So just want to see what happens after the news is done. We have more news coming up. I believe, the Canadian dollar rate statement, monetary policy. We just had CPI. So about an hour 15 from now, we should be seeing more volatility. So maybe we can just sit on our hands for now on this. CAD Swiss franc. I think that was one of them. CAD Swiss franc. So we had originally discussed that we are very much bullish. There was a higher time frame level of supply right in here that we did react from, but we never maintained any sort of bearish momentum. We had a little bit, but then it just was very short-lived. We continued to push up. So the shift in structure and shift in momentum wasn't there at all. We ended up forming perfectly equal lows, kind of a retail head and shoulders formation. We have an area of demand here that came into an area of demand here, just continuing with market structure. So I figured, even though we did come up into supply over to the left, there was no reaction. So the momentum is still to the upside. We want to continue to be looking for buys, and that's really what we want to be doing. 765 up into our prior market structure, just getting deeper into this imbalance, deeper into premium price. If price is to go short, we really ought to continue to push higher before an overall short occurs. But again, I'm not quite sure if an overall short will occur. We could easily just continue long. We are very much bullish on the CAD. But for now, I am looking for longs on this.
And think about law of effort there.
Yeah, definitely. See what else, guys. See the chat here.
Yeah, you just talked about EU.
Yeah,
potential intraday.
CAD Chef, it's quite tough because we're seeing such strong volatility.
Yeah.
US30, honestly, I don't really trade US30. You guys love your indices, don't you? A big problem with people who are new to this is indices are probably not a good thing to start off with, especially if you're learning. Just because it's very volatile and it pumps out pips, it doesn't mean that it's something that that should be the only reason why you trade it, because it could also pump out pips in the opposite direction of your trade. So I personally like just Forex pairs. They wave better, even though some of them can be slower. It's all proportional, right? Sure, you could have a trade here that you sold from, and you could be up, 660 points, right? But let's say you bought it, you could also be down 660 points. So it's the same thing. So don't focus on the volatility of it or the amount of pips it pumps. Focus on your risk to reward. It could be on a pair like AUD NZD that we're trading, right? That hardly moves, right? But if you have confluence and your rules are met, you place your trade. Because the market will move. It just may not move as fast as you want it to. Honestly, guys, I don't really have anything for this. I don't trade this that often at all. maybe looking for continuation short. We can see that we had our run. We had a liquidity run. We came up into supply. Just falling from here. Overall objective is that 29,600. That is COVID highs. That was the high that we had before the whole COVID situation. So that will be the overall target for this. I would continue to look for shorts, in my opinion. Maybe just getting some sort of retracement for continuations. Again, I don't really look at indices, so I can't really help you guys out. The concepts will apply, but again, even though the concepts apply to any asset class or market, you really want to have that understanding of how your particular like currency pair or indice like moves. So for instance, we've been working with Euro USD for years. We know how it moves perfectly. Something like US30, even though the concepts will apply, it's just very difficult. I don't really know how it moves. So it'd be hard to help you. Let's see what we have. Any other questions, guys? Any pairs you'd like me to go over? I'm here. You have me until, say, 9 o'clock, 12 minutes.
Yeah, guys, don't force anything. Today there's a bunch of news this week. Should already be up big from the last couple of weeks.
Yeah, if you're in VIP, guys, you guys are killing it. I had someone message me the other night. He's like 14 out of 16 his last trades. It's awesome.
Absolutely.
That's the thing, guys. Like sometimes we'll have quite a bit of setups. Like the past 2 weeks, I've probably traded 20 to 25 times. But that's just what happens sometimes. Sometimes the market presents you with all these setups. Sometimes they don't. Have I reviewed NZD Chef? Yeah, I can go over NZD Chef. Where is it? There it is. NZD Swiss franc was interesting yesterday because, and we sent this out, we had our Asian range here. We faked out, enticed the buyers, came down, swept the sell side liquidity, enticed the sellers, rallied to the upside. So that was our setup. Took out the Asian high, enticed buyers, took out the Asian low, enticed sellers, taking stops from the buyers, taking stops from the sellers. Pushed back up, came down into our level of demand here, and we rallied. But we never got that continuation. We swept pre-New York highs, and then we just fell from there. So sometimes it just doesn't work out the way we want it to. We had a good reaction. We just never had much follow through. So NZD Swiss franc, higher time frame. I mean, we're bearish, definitely. But it's not very pretty right now. If we get back up into premium price, so let's say daily time frame, just retesting market structure, filling imbalance, daily time frame to supply, maybe a little bit higher up into this imbalance. See 4-hour time frame, our last buy to sell, imbalance here. Just any excuse to sell in and around this region would be nice, but until then, I don't really see a setup. And we are still bullish counter trend. We can see higher high, higher low, higher high, higher low, higher high, higher low. So we are coming into an area of demand now. This could be interesting, right? This was the low, and you can see this low wicked this low. This low produced this higher high because this low produced this higher high. So now this becomes the range from this low to this high. So we really ought to be reacting now, which we are kind of seeing a reaction from. But if lower time frame, we can get some confirmation for longs, that would be nice because we are coming into this area of demand within this counter trend. We still have these relatively equal highs, and we still have our regions of price I'd like to come into before potentially shorting. So we can see that we're having the reaction now, but that's what we need to be looking for. Where should we be coming into potentially? So we had that lower time frame trade here just because we did sweep these lows, swept them, and we continued, and we had that setup. We had that intraday setup. It just never continued for us. Sometimes it would. Sometimes we won't come down into this overall demand level, and we'll just continue long. And that way, that setup would, produce us quite a bit of return. But in that case, we never saw any follow through. It's okay. We fell back to the downside, but this would be your level in which you want to be taking a trade from. But until then, I don't really see much else, in my opinion. Gold, oh gosh. I can look at gold. I haven't traded gold in years, guys. So I'm not going to be any help to you. Yeah, I see. I hate the way gold moves. It's disgusting. It's awful. I know some of you love it. I don't understand why, but that's you. I just don't like the way it moves. Now, something like this would have been a nice setup. Just looking at this for 2 seconds. Sweeping liquidity, breaking counter trend structure, we're bearish. That would have been nice. Pull back into premium for a sell-off. See, that would have been nice. But other than that, I don't really like how it moves.
I think, gold is, continue to sell it into, we have
those equal lows here. So I think
repeated.
that will be the draw. If you can find setups for shorts, by all means do so.
Yeah.
That's what I would look for. But personally, I just don't like the way gold waves. So it's just more difficult and stressful for me to find a setup. Because gold, gold can move very erratically. So many people would probably be like, oh, okay, you have supply here, lower low, supply here, lower low, supply here. Which, yeah, you could do that. But what happens when gold goes like this? Which it does quite often. And for me, it's just not worth trading. But that would have been a nice setup. What I like Forex pairs because they provide the clearest setup. So if you have a level of supply or something like that, and you come up into that, you usually see these counter trends form quite well. You can see lower time frame divergence within these levels. You can see lower time frame distribution prior to coming up into these higher time frame levels, and you can get these higher probable setups. Gold, it's just very erratic. It just moves. And that's just not something I like to dabble into. Do I trade oil? No, I don't trade oil. I don't really trade anything but Forex, guys. I've found the most success just trading Forex. I just stick to a select number of pairs. And that's really probably what you guys should be doing. And if you guys just trade indices or commodities, that's perfectly fine. I'm not saying it's anything wrong with that. But just stick to a select few pairs. Get used to those pairs and understand them.
Mm-hmm.
Yeah, it could be about the money
less
too.
is
You
more,
usually
guys.
like to have a higher account size trading commodities or indices. I just found Forex to be my personality. Can you make the same type of money with Forex? Yeah, you can. Of course. It just comes down to risk to reward. It's not about pips at all, guys. It's not about pips. Pips don't make you money. Percent return makes you money. And we know this. I mean, if you understand, if you have a 5 pip stop, 50 pip take profit to 1 to 10, it's 10%.
Yeah, a regulated broker. I mean, regulated broker, like in the States, you'll have 1 to 50 leverage. If you're risking 1% of trade, you really shouldn't have a leverage issue.
Yeah.
So yeah, definitely.
Yeah. No, I wouldn't risk more than 1%. There's no point. Once you start building that risk to reward and ingrain that in your brain and risk management, then you'll be more prepared to take on more capital. Because if you have a $100 account and you're risking 10%, 20% per trade just to try to flip it, what if someone gave you $1 million? You can do the same thing, and then a few trades to lose that $1 million. It's just not professional. So that's the thing. If you want trading, really should be only one way to go about trading. There shouldn't be like I just want to do it for fun and make a few dollars here and there. Because at the end of the day, you're just going to end up losing if you don't practice how a professional trades. You need to get in that professional mindset, do the things that they do, or else it's just going to be like gambling at the end of the day.
It's all about the money people have to trade with. Most starting or most don't have big money to trade. Well, no, I don't think that's as much the issue is, or as the retail community, they don't treat it as as entrepreneurial. You have to treat it as a business, not a hobby, right? And most people are just more or less treating it as a hobby, or as like Nate said, gambling. and trying to flip accounts as opposed to treating it like a business and mitigating risk. So that's the biggest issue. It's not the money. The money will come naturally as you grow in experience.
Mm-hmm. Yeah, it's psychological as well. And you'll learn that, guys. I mean, if you try to flip accounts, you'll be humbled quite quickly over time. But if you put into practice the practices of the professional traders, you're not going to be making as much money up front. But when you start building your account and building experience and even getting funded, you'll have those practices in place and you'll be much better off in the long term. Many people love instant gratification. They want to make money right off the bat, having no experience. They want to flip accounts, want to make $1 million overnight. I mean, you can do that. Do that for the rest of your life. You'll never make a penny. It's just, it won't happen. And I'm sure you guys knew this. Those of you who are doing that, there is no way you're sustaining flipping accounts. Impossible. But if you take it slow, really have that education first and practice and gain experience using risk management, trade management, everything that's essential, you'll be much better off in the long term.
I mean, look. So, I mean, the challenge fee really isn't that significant, but you now have the ability to use OPM, other people's money, right, at a significant scale. So that kind of removes that obstacle from the equation. So now it's more so, how educated are you, right?
Mm-hmm.
How much experience do you have? Have you prioritized your education? Because the money and the leverage is there, right? Now, you still need to be of sound mind when trading prop firm capital or your own capital, obviously. But, I wouldn't focus as much on the money as really the process of gaining the necessary experience. And like I said, the money will naturally flow. You'll naturally start passing challenges,
Mm-hmm.
right? It'll just start to click out of nowhere.
I mean, that's how I was when I first started trading, guys. I was the person who wanted to make a lot of money right off the bat. I saw a lot of my friends doing it. Obviously, they had more experience than me, but I wanted to just get in and to try to flip accounts. I don't know if you guys watched my interview with Cam. I think I discussed it. My first ever trade, I opened up with, I think it was like a $200, $250 account or something like that back in 2017. 2017? Wow, it was long ago. And I placed, I think it was a 0.25 lot size on Bitcoin. And if you guys know anything about that, I can go south real quick. And I didn't know what I was doing. And that happens to a lot of people. But over time, you'll start to realize that over leveraging, not using risk management, not having the proper psychology, and doing all those things that retail traders do, it's just not fruitful for anyone, except the big banks who are stealing money. So,
yeah, you should have seen the look on his face when he blew his account on the first trade. I was there.
But you learn, and it's all a learning curve. But you have to be able to fail and then change the way that you go about it instead of constantly trying to continue to over leverage and flip your account. It's just not sustainable. And if you can practice the practices of I wouldn't say ultra rich, but the professional traders, get a mentor, understand what they do, and learn from them and practice them, what they do. It's much better for you in the long run. So I will be coming out with a new podcast here soon with Cam, going over algorithmic trading. Algorithmic trading is huge in this industry. It has started to take over manual trading, especially for institutions. Institutions were once, people sat at trading desks and traded manually. Now they're more reliant on these algorithms. And we want to go over the difference between institutional algorithmic trading and the whole retail algorithmic trading that's just blowing people's accounts left and right, scamming people out of hundreds of dollars, for these algos that they put on these marketplaces. That's not professional. So if we can shift your mindset into understanding what you probably know now as retail into these more intricate, sophisticated, institutional-based algorithms, what they aim for, what are their goals, how are they trading, you'll have a much better chance of succeeding if you find algorithms or can produce algorithms that do that. Also, at the same time, I dabble into psychology. And if you guys are struggling with that, pay attention to the new podcast that will come out. I think it's probably going to be early August. And I go really hard in depth on the hard truths about trading and my advice and experience over the last 5 years. I think that will really provide some value to you. So yeah, just stay tuned for that. But guys, do you have any last questions before we hop off today? Anything else? Could be trading related or not. I think that will be
tuning. So if you got in that, congrats. I'm probably going to sit on my hands on GA and GN. I'm not liking them. So.
Guys, if you're at all struggling whatsoever and you want some help, if you think you have what it takes to really take your trading to a whole new level, if you want to do this full time, we'd be happy to sit down with you and talk to you about it, how we can get you there. And everyone's different. There's no cookie cutter way of doing it. It's a whole individualized approach for each individual trader. I work with different traders. I work with many different people in different ways. And it all comes down to the personality and lifestyle of the client. And that's where we are much different than many other people and many other mentors. Many other mentors, here's the thing. They may provide good value, but they'll leave you on the street and just forget about you once you paid. That's not our goal. And we're more aiming to obviously provide you with the necessary resources and steps to hit your goals. But at the same time, how can we prove that to our clients? Well, we're starting to develop more of a potential money back guarantee over an X period of time if your goals are not met. That really puts pressure on us to perform for you. And that's ultimately what we want for our clients. We don't want the typical, you come onto our program and then we forget about you. That's awful, terrible. I know many mentors who do that because they're just looking for those sales. But we want to really foster your education and mentor you until you hit your overall goals. So if that's something that you're interested in, we'd love to speak with you on a call just to kind of get a feel for where you are financially, where you are in terms of your overall trading goals and stuff like that, and just see if you are the right fit for us, because we have a specific criteria that we look for in individuals to bring you on board to our program, because it's very in-depth and sophisticated, but it has transformed many lives, and we love doing that. So book a call on our website if you're interested. I think I saw it.
Drop the link or the URL. I can't comment. Sure.
You drive a Lambo. I think I saw that question. That's funny. I personally do not. That is a goal of mine. I have before. I like Range Rovers. I have my own Range Rover. Don't even. I know it's just a funny question. I know you weren't, insinuating anything with that, but I wouldn't focus on material things. Focus on the knowledge, education first, and all that will come over time. Just like Aiden said, money will just start to flow. Yeah, guys, no problem. Thank you for hopping on, everyone. I appreciate the time you guys put into this. Stay tuned for our Sunday breakdown. You're not going to want to miss those at all. I'll have one. I don't think it'll be through the Trading Nut channel, but I will definitely post that link in my Discord. Actually, I can put my Discord in here. If you're interested in joining a free community, I post occasional setups in there on the Discord. Let's see.
Yeah, I'll have Smart Money Sundays, kind of a pre-recorded video. That'll hopefully be a 20-30 minute video, kind of pre next week about what we're looking for. So if you can't make the live session, which we're going to do, Nate's going to send out a Zoom link for that on Sunday as well. But if you can't make that, there's obviously Smart Money Sundays. It's going to be on Trading Nut channel going forward. So, a lot of value always in that episode. I think I'm on episode 62, 63 by now. So over a year worth of episodes. And it's always been free. So lots of value, and it's higher time frame, really just, POIs where we're expecting price to head for the week. So stay tuned for that. Be on the lookout for that this weekend.
Awesome. Anything else, guys? Last minute questions? Ariel Fx is called switch. You just have to press that. Boom, magic. Yeah.
Such great humans. Try, man. Really try. There's not, this world is a lot of negativity in this world. So, a lot in the industry too. So we try to be always positive and uplifting and provide value to as many people as possible. We're always here.
If you guys are currently in our VIP program or currently follow us on IG, you would see all the trades that we have been taking over the last month or so. There's just been so many setups, and so many of our people are just killing it, but yet we're still doing these live sessions because we really do we like speaking to people like you. We like speaking to, an audience and teaching them what we know. It's always good to give back. I think that no matter what skill that you possess in your life, doesn't even have to be trading, just anything that you guys are good at. And I'm sure every single one of you are good at something and better at something than other people are. Utilize that to your advantage and to other people's advantage and help them. Always important to give back. I don't make money from these live sessions. I don't make money from doing these videos. I don't make money from these one-on-one sessions I do. I don't make money from it, but I do it because I love to do it. I love doing it. That's really what matters. You guys in active trades now? Yeah, I'm in a few.
Yep. EG buys, talked about that on the session. Playing out nicely.
I can even just show you a couple of them that I'm in very briefly, and then I'll hop off here. So I am originally in GBP AUD from here. I was in it from here, and this is all sent to our VIP guys. If you don't believe me, if you guys are in VIP, you can attest to it all. In from here, I'm not in currently. I wanted to see more of a reaction. We got it. If you guys are in this, congrats, you're in a little bit of profit right now, but I didn't personally take this, so I won't claim credit for it. This is just right here. This is just a lower time frame supply level. I did not sell it there, but I'm in from here. So hourly and in from here. So I'm not in that. UJ, I'm in a lot currently, just floating. Let's see, 1, 2, 3 entry, 4. I mean, 5 entries right now, waiting for price to get back in a discount for maybe a 6th. GN, I am currently in 3. I'm in profit on the first one, which is right here, the imbalance to the T. And then from this supply level, I'm in profit on a little bit. And then this one, I'm in a little bit of drawdown. I entered at 94.19. So just a couple of pips in drawdown, but
yeah, see that news spiked the high, ran that liquidity.
Stops are right here.
Yeah, ultimately probably will spill over.
Yeah.
But not seeing the reaction at the moment.
Euro GBP in from our level. We knew that because we had a 1 hour time frame 3-pin pattern with imbalance 84175. We had the equal lows forming for the past couple months. We are in a bullish market. We tapped into that. We reacted. We broke counter trend structure and just simply put, had a great entry at that 20-minute demand zone. We had that repricing event and then the continuation break. So we're in that one. CHF JPY, Did we miss my entry? No way. Hey, you know, it happens sometimes, and I'm not going to claim that I got in. I didn't. I did not get in that. It did not hit me. Actually, I will have to check my MT4. I don't know if I did because TradingView is a little bit off. I may have gotten the fill, but I'm probably assuming that I didn't.
Still could push higher.
Yeah, there we go. I got that fill. Perfect. See, I mean, guys, every single solitary day, it's always, if you understand market structure, if you understand liquidity, if you understand supply and demand, this stuff will come easy. It's you will fail. It just takes practice, but it also takes experience. 6-8, there's so much confluence going on in here. We have objective down here, perfectly sold. Didn't even know I was in that until just now. UCAD I did lose on. I will go over that on my Sunday live. I'll highlight why I lost this trade. And I'm transparent. I do lose trades. I'm human. Everyone does. And I did lose. It was somewhere in here, I believe, on market open. Did get that run to start the week. But NZD Chef, look at that. Perfect right there. Remember, I just talked about that a few minutes ago. Took partials here, break even. Oh, well, I didn't make much money on the setup yesterday, but it was a perfect setup. Met my rules. Had to take it. AD NCD, I am in, obviously, from here. I'm in from the original higher time frame level, and I'm in from here. So did get the 3 entries on this. I'm looking for a 4th, but obviously we've mooned since. NZD USD, I'm in from, wow, look at that again. Two times. I'm in 3 entries here. 1 from last week, 6206, and then from our 2 areas of supply. We did sweep that liquidity. Stops are at break even. If we come back up, we'll probably just run the high again because that's a liquidity run. So that's when you would put stops to break even in that case. And the dollar is going quite berserk at the moment. And I don't think I talked about this, but I mentioned it with Aiden to begin the day here. I said we had equal lows. Previous market structure could tap into that before rising. Let's see if I'm in anything else. I was in this one. Stops are at break even here. I did take a lot of partials when we came down and swept these equal lows. So if we get stopped to break even, that's okay. It happens. CAD Swiss franc. I'm in profit here. Mentioned this to start. Stops are below the demand zone, obviously, because stop loss and take profit positioning are so crucial, guys. It's important you know exactly where to not only get in, but where to put your stops and your take profit. And this because we swept liquidity at the right time of day, 8 in the morning, New York session open, and then we continue with trend, equal lows with the draw on liquidity. We have descending liquidity. We have the higher time frame level up here. We came into prior demand, so we shouldn't come up below this low here. So hopefully we can see continuation. So I'm in quite a few trades. Obviously, I do lose trades. It happens. But that's okay because we have good risk reward, and 2, we're having a pretty high win rate for a while. Everyone loses UCAD. Yeah, I haven't had much luck with UCAD lately.
Yeah.
I'm focused on just one pair for at least a year. That's good. I would say, maybe more than 1, maybe 2 or 3, but you don't need anything more. The reason why I have so many is because I have clients that look at all these different pairs. So I kind of have to stay up to date with them. But yeah, guys, if you want to, that's a good question. Is 20% a month achievable? Consistently, I'd probably say no. But if you have high risk to reward trades and you have experience and you can manage your risk well and you can manage your trades well and you've developed the skill over a long period of time, 20% in Forex trading is possible. But you have to have good psychology in order to consistently do that. I would say personally, no, I haven't been able to do that. I've had 20% months. Heck, I've had a 30% the past 2 weeks, but I've also lost some weeks. I've been break even some weeks. So it kind of averages to maybe about 10% a month, which is still phenomenal. I mean, you guys have 401ks, right? Maybe IRAs that probably do 7% a year average over the long run. Hedge funds do 15 to 20 a year. But just think about it. If you can compound that year after year after year, you're a millionaire. So you really don't need 20%, but I wouldn't say it's impossible. I would just say it's quite unrealistic if you're a beginner. And I'm just talking in general. For anyone who's a beginner, probably unrealistic. What time frame do you enter? Any time frame. from the hourly, 4 hourly down to the 1 minute. I look at the 1 minute, 2 minute, 3 minute, 4 minute, 5, 6, 7, 8, 9, 10, 15, 20, 25, 30, 45, hour, 90 minute, 2 hour, 3, 4, 8. I look at all of them because it's so important that you have that. It's like an art. You have to have that holistic perspective. There's no specific time frame in which I enter from.
Exactly.
So it's all just depending upon what it looks like. But yeah, guys, if you want to hop in and let me teach you how to do this every single day and get these entries like we're getting, feel free to book a call. I'd love to speak with you guys. I really love helping you guys out because I like seeing the progress as well on you. It'll take some time. If you are focused and dedicated, if you are, we can get you there, but it's ultimately dependent upon how much time and focus and dedication you have as well. 20% on high leverage account, loan unless needed. Yeah. If you're over leveraging, you can definitely hit 20%, but again, you can easily blow your account, especially if you don't have good psychology. That's why I only stick to quarter risk, half risk, or 1% risk and never go above 1, ever. It's not smart. All right, guys. Well, take care, guys. I'm going to hop off here. I have some other stuff to do, but thank you guys for sticking around. I appreciate your time today. And we will see you all on Sunday's live session.
Thanks, everyone.
Take
Cheers.
care. Cheers.